Welcome to Live in the Know with the Shulkin Wilk Group. As we continue to all work together to navigate through these tricky times, we will keep bringing you top knowledge insight, not only into the real estate world, but also what's going on in the local community through the eyes and words of our hardworking local business owners and our selfless and charitable neighbors.
Over the past couple of weeks, so many of our conversations with clients and other real estate agents have revolved around the uncertainty of the mortgage industry. So who better to come on the show than Shant Banosian of Guaranteed Rate? Shant has been the #1 loan originator out of every bank in the country for the past 2 years running. As a local guy done well, Shant grew up in Watertown, played football at Bentley College, and now lives in Belmont with his wife and 3 daughters. So without further ado, let's bring Shant on board so he can help us all live in the know. Shant, thank you for coming on with us today. We are excited to have you and look forward to your great insight.
Yeah, my pleasure. Thank you guys for having me. This is pretty cool.
So to start off, one of the biggest questions we're seeing that people have is with such volatility in the marketplace and seeing, the rates kind of go up and down. Can you give us an idea of what's going on and how things are being affected?
Yeah, the volatility in all the markets has definitely made its impact into the mortgage world. So, historically speaking, whenever the stock markets come down in price, and you've seen, which we have seen, I mean, the Dow was almost at 30,000 just like 3 or 4 weeks ago, and now here we are. It dipped below 20,000. It's had a little bit of run over the last couple days, but in general, it's come down almost 30% and given away all the gains that it's had over the last 3 years. So typically what happens is when money comes out of the stock market, it usually goes into things like bonds and treasuries and mortgage-backed securities, into what's deemed typically safe assets that provide a return. So people want to take their things out of risky things like stock and put them into safe things like bonds and mortgage-backed securities, which are investments that yield small returns, but typically considered safe, especially in the U.S. housing economy. What happened is that there was so much fear and panic in the marketplace that pretty much everybody was selling everything. So they were selling stocks, they were selling mortgage-backed securities and treasuries and gold and crypto. Like it was just a mass exodus of all sort of investment class assets and just into cash. And so the only way, mortgage-backed securities and assets, the only way it can attract more investment is by, yielding higher interest rates. And so mortgage rates started to creep up because nobody was buying them. So this is big institutional bond investors that buy mortgage-backed securities, and they just stopped. And the reason they stopped is because, one, there was a move to cash, but also because, with what's going on in our economy, you have, job loss, and that's really the big one. Is that these banks and these bondholders don't know the performance of these mortgage-backed securities and what they're going to be with the big spike in unemployment and potential default on mortgages. So if you have an asset that's maybe not going to pay back, then it's more risky. On top of that, you've got you've got Fed stimulus, and now they announced a $2 trillion stimulus plan. They're buying mortgage-backed securities, buying treasuries. They're pumping money like crazy into our system, which is great. But what also mortgage-backed security investors are afraid of, there's going to be a lot of prepayment into refinancing into lower rates, presumably when they come. So pretty much that's like nobody knows how to price a mortgage right now, and that's what we've seen over the last couple of weeks. So you've seen rates the last 3 weeks in a row. Rates have started out amazing at the beginning of the week, and then they've gotten almost sometimes like a whole point higher just in 1 week. So you see low threes, which is like historic lows, and then you see spikes up to 4% by some Fridays the last 3 weeks in a row, and it's been quite the challenge. We think that's going to calm down is the Fed stimulus, and it's already started to come down this week once the stimulus plan was officially announced. But I think there's a lot of volatility ahead because of what's going on with this whole coronavirus thing. I think that the other piece that we're seeing, and this is another very large part of it, so it's obviously complicated and not an easy answer. So I'm doing the best I can. But on top of that, we saw a massive refinance boom start in February. Right, rates had come down because of some of the fear in the marketplace. So it was acting like a normal market, but it happened so fast and furious that you'd see refinance activity like quadrupled. On top of that, you had it happening right in the middle of the spring market, which is when the purchase activity is its highest. So you've seen demand for mortgages reach just all-time highs. And so it's a supply and demand thing. when everybody wants something, typically the capacity of our industry fills up. So check this out for a statistic or some numbers. I think that's interesting. There's $11 trillion of mortgages in the US, right? Based on where rates had gone down in February, about 7 trillion of those mortgages were eligible to refinance. Our industry can only support about 2 trillion a year in mortgages. So about 7 trillion people either have the ability to refinance or purchase a house. Have the ability to refinance because of where rates are at right now. But our industry can only has about $2 trillion of money in a year to lend out. So you're just seeing so what happens is when lenders fill up and they can't execute anymore, they just raise rates to slow down capacity. So that's one way.
Well, Shant, that's a ton of information there, but what you just hit upon, I had not heard that before with the capacity. So what happens when you've got such an overwhelming number of people who are trying to borrow?
Yeah, so it's you have to be smart about how to lend the money that you have available to lend, right, across all industries. So you've seen a lot of our I'm just speaking industry wise. I've seen a lot of our competitors be picky and choosy in terms of what kind of loans, where they want to utilize their assets in terms of where they want to lend. So I've seen over the last month things that I never thought I'd see before. People have closed up shop on refinances, right? Like they just stopped taking them because you have clients at spring market, so purchase activities is so active. You're trying to, somebody already has a mortgage, right? You obviously want to be able to save the money, and certainly we're doing a lot of refinance activity. But if somebody's trying to buy a house, you kind of have to be there for that, right? So you've seen a lot of lenders go to a model where the purchase rates are the most attractive, and trying to fulfill that first, and then refinances are kind of next. And then you've seen people just kind of shut down altogether. You've seen the jumbo business. It's a capacity issue. Jumbo rates have actually gone up, whereas a lot of our clients are calling and say, I want to refinance. There's a lot of jumbo lenders that have just increased all their rates because they cannot handle the capacity. And some banks, because of the volatility in the market and the new credit risk, have just gotten out altogether. It's I never in my we all plan for business and we all have our different challenges. I never in my life planned for too much business, right? From a industry capacity standpoint, I don't think our industry did either. And that's kind of one of the challenges that we're facing right now, is that there's so much demand, just not enough supply cash. And now and that was a challenge 2 months ago before this whole coronavirus thing went into kind of full on pandemic. Now you've got some instability in terms of unfortunately 3 million people were laid off last week. That's 5 times as much as that's ever happened before, no matter what kind of issue we've had in the past. And so now, can those people repay their mortgages? And for how long are they gonna be able to, repay, or continue to pay their mortgages if they're not working? Stuff like that. So there's this, you got volatility and instability, and so some people just tend to step out of it. Now, that's not what we're doing. We're a very balanced company. We've kind of got we run refinances and purchases in 2 separate silos, and I think we're doing a great job fulfilling everything. Fortunately, we have the capacity and the efficiencies to be able to do that. We haven't seen that across the board. Some companies are doing a great job, and some other companies are just, stepping out of the game right now.
Buyers are curious, as they're looking to either get into the market for the first time or looking to bump up, downsize, whatever it is. They're curious how the mortgage process is changing. Has it changed at all since this all began? What are banks and lenders doing differently?
Yeah, I think the benefits of the buyers is that money's much cheaper than it was last year and the year before that. So in my opinion, it's a lot of times for buyers, it's leveled the playing field in terms of borrowing costs has gone down. So home prices have gone up, over the last couple of years, and over the course of time, it always goes up. But so I think it always creates a really great opportunity when money becomes cheaper, and therefore they can buy what's an appreciated house with less of a monthly payment, right? But in terms of the fundamentals of getting a mortgage, 10 years ago we had this financial crisis, so that kind of prepared us for times like this, where really from a mortgage standpoint, we document everything, right? So what we evaluate from a buyer is, in order to get them pre-approved or eventually get the mortgages, we evaluate their credit, we evaluate their income, we evaluate their assets. Are those going to get more stringent again? As the economy kind of slows down and maybe there's loss of job and all that kind of stuff. Yeah, I think you'll see. I think credit got stricter 10 years ago, and they've done a really great job. I think you might see certain loan products get a little bit more strict, but in general, I think loans have been performing very, very well because of the additional documentation that's gone into effect. So I think from a buyer standpoint, you have to, the better your credit scores are, the better interest rates you're going to get, the more loan products you're going to qualify for. So that's one of the first things we do, is we do a thorough credit evaluation for somebody, and we make sure that anything that we can help them improve their credit, we will, because it opens up more products, and it opens up, cheaper borrowing rates, because the better your credit is, the better interest rate you get, therefore lower monthly payment. We want to make sure you're employed and you have income that will allow you to afford the mortgage that you're looking for. So it's really important that you understand what your budget's going to be, and that your budget makes sense with the income coming in and the other expenses that you're going to have. And then we want to know where your down payment's going to come from. So, if you were thinking about things like, utilizing your 401ks or investments, or just really being clear about what you need to understand, what your down payment options are. There's a lot of misconceptions about down payment. A lot of people think, you have to put down 20% or 25%, and some loan products certainly require that, but there's a lot of really amazing loan products out there with 5% down and 10% down. And especially in these markets, that becomes really important, because, a lot of times, even if you have 20% to put down, that's not maybe such a great idea sometimes, because you might want to get into the house with 10% down and keep that other 10% to do the upgrades and the renovations. And then just obviously keep some, in the case of emergency, and like a slush fund, so that, as things come up that you didn't plan for, like a coronavirus epidemic, that you have some, you have 6 months or 2 months or a year's worth of savings, whatever makes you comfortable. But so I think that the first, what a buyer can expect is that a lender is going to ask you a very thorough analysis of your credit, income, and assets. And then the second part of that is our job, in my opinion, as a lender, is to really have you prepared and set clear expectations, so that when you're out there looking for a house, there's no surprises. So we want to make sure you're super clear on what your monthly payment is, what it's going to be should you find a house in your comfort zone, what your comfort zone is for a home purchase, what your max is, because I think it's important to understand your range, because it's very, there's not a lot of inventory out there. There hasn't been for years and years, and I don't think that's probably going to change. And so I think it's really important to have a range, so that if you find a house, and whether you're looking in one market or multiple markets, how that's going to impact your finances. And then just getting really clear as to what you need for out-of-pocket expenses. And when I say that, it's not just down payment, it's also things like closing costs and reserves, and then also money that you're going to need once you're a homeowner. So it's not just, we don't just kind of function and give us some information, we'll give you a pre-approval and call me when you find a house. We're really analyzing everything, explaining the entire process in terms of paperwork needed and processes that you go through, and then setting really great expectations, so you're armed with a ton of information and really empowered. I can't tell you how many times clients come into our office, if we're doing a good job, or any loan originator is doing a good job. I have clients that have come in and say, I'm looking a year or two out, and they leave, they've got that letter, and they find a house the next week later. And it's not that their finances changed, but it's like they just understood the process, became much more simple, and it became much more real, because a lot of times people are ready much than they think, because of the options that are available out there. But then also that car, obviously a big deal. You want to make sure you're getting it at the right time for you. And if that takes some preparation, or if that's ASAP, both those things were, great.
So, Shant, you just hit upon some interesting things, talking about the pandemic. You talked about people's down payments. Combining those, you already mentioned the jumbo mortgages are changing. In the industry, what really is being affected with the coronavirus? And outside of the jumbo mortgages, which you referenced, the refis you mentioned, are you seeing changes? We know there's stuff with appraisals, rate locks, loan commitments. What's the overall kind of gist of what's happening?
Yeah, in about a 3-week time, our entire industry is really had to reevaluate itself and how it functions, because housing is such an essential part of what happens in our economy, and trying to keep that going, I think, is really, really important. I really do believe, obviously we're all in the housing industry, but I do think it's an essential function of our economy that's healthy. That we already, the recovery that we've seen afterwards has been amazing. But I think that the big thing that's changing is that so immediately, I'll just kind of go and a lot of these things have been great, because it's brought us into like the 20 double and other industries and bringing them into our world. So, you know, we're pretty close to going up full out e-closing. You know, that's been a major push for our, you know, I'm sure, and I think you said you had some attorney partners on. I'm sure they touched upon that in your podcast. But you know, we're getting, you know, to the point where we can do. You know, we offer technology that allows our clients to pretty much sign half of their closing docs the night before. We've been utilizing that now for a year. But I think in certain states they're able to do a full out e-closing, e-recording. Massachusetts is pretty much on the verge of announcing that. I think that's going to happen. You know, because clients don't want to sit across the table from an attorney and touch things and be across from sellers and all the people, you know, and just near people. And we all have to do the social distancing thing. Is real, it's healthy, it's smart. So we need our industry to be able to accommodate that. So e-closings, I think, are going to be a real thing right away. The technology already exists to full out notarize everything. And, you know, I think we're going to use, it's going to be a combination of, you know, technology like this that we're on right now using webinars and then, you know, just being able to kind of further some of the technology that we have, like the DocuSigns and the notarize.coms and all that kind of stuff. Appraisals have changed immediately. I've actually was blown away by, you know, whenever you think of the government, you think of slow moving, you know, bureaucratic, right? Like things just never, you know, things don't usually move fast. Well, one of the best things that we saw happen was Fannie Mae, Freddie Mac came out just last week and made a huge announcement that on their loans, which is, you know, the biggest percentage of mortgages in the country, that they're allowing on purchases full out desktop appraisals on primary residences, most second homes, and most investment properties based on loan to value. So the appraisers don't even need to go out to their properties right now on appraisals when it's a Fannie Mae or Freddie Mac loan. That happened in about a week's time, which is like amazing. And we're utilizing it right away. In certain cases in which the appraisers need to go out to the property and do a full out inspection on some refis and jumbo loans and all that kind of stuff, the appraisers are, you know, working with the clients in terms of like literally FaceTiming and Skyping and doing virtual walkthroughs of the property and, you know, between text pictures and just verifying things without kind of human contact. So our industry is kind of going, you know, almost to a full out humanless process without like an interaction face to face, right? So appraisals have been impacted, closings have been impacted. You know, we saw, you know, a lot of the towns are shutting down. Well, not a lot of towns. The whole state's shut down due to the state emergency. So a lot of towns aren't doing smoke certs right now, and so we've seen that that's shifted from the seller's responsibility temporarily to the buyer's responsibility as long as there's some sort of agreement. And the buyers have 90 days until after the state of emergency is to you know, obviously get that done. On our end, the mortgage application, you know, we've been fully digital in terms of the way our clients apply with us and get us all their documentation. So our clients do a full out digital mortgage application, and then they can upload all their W-2s, their pay stubs, their tax returns safely and securely right into a portal. And we have ways to verify all that stuff. You know, we have ways to verify income and assets nowadays with the technology that we have without even collecting things like W-2s, pay stubs, and bank statements, because there's portals that allow us to verify those things through third parties, which makes things really fast and easy. So, you know, the technology's there. It's just a matter of the laws and the compliance allowing it to be used in every part. In some state, and you know, the mortgage business is very state by state. So some states are farther along than others, but I think Massachusetts is doing a pretty great job in terms of moving things along quickly. And it's smart because, you know, with registries closing, for example, you know, we haven't been able to do, you know, if they didn't allow for gap insurance and electronic closings, you know, closings would have stopped, you know, and, you know, that's not good for our economy. That's not good for those people. It really impacts a lot of things. So the fact that they're trying to do everything to keep that moving along and turning what was like a health crisis, you know, which is quickly becoming a financial crisis, but you don't want it to be a health, financial, and housing. And I think they're trying to keep housing moving along, so that way, as the recovery starts, housing leads the way, which I truly believe is going to happen.
Well, I think we're all appreciative that everyone's working so hard together to make sure that every part of the transaction can move forward, and that, you know, buyers and sellers don't have to worry as much about, you know, closing out the deal and buying or selling a home.
I think that's key, what you just said. You know, one of the things that I've enjoyed the most out of this whole thing is like how everybody's come together, right? Like, it's really cool. when everybody's being nice to each other and they realize that we're all going to kind of a common goal. And the common goal is to, somebody wants to sell a house, somebody wants to buy a house, and we all want to get to the finish line together. And so I've said it a few times this week, like, I just feel like everybody's being nicer to each other, which is great. And everybody's working really hard together to just come up with make sense solutions, and get everybody, with all the other craziness that we have going on. It's really cool that, we're just working smarter, more efficiently, and keeping things moving, because without kind of everybody working together, it would be really, really difficult.
And the changes happen fast, which has, kept the housing market, in the greater Boston area pretty seamless right now, which is great.
Aren't you blown away by like how busy it actually is? Like, I mean, I'm taken aback every single day for the last 3 weeks by how much activity there is both on the refinance and purchase side, considering what we have going on. I know it's not like that in every market across the country, and I'm sure there's pockets here where in Mass where it's not the same, but I am blown away by how much business is being conducted and now conducted virtually.
So to kind of move on with this and continue this point, should buyers be concerned about getting to the closing table? And conversely, should sellers feel less confident about a pre-approval when they receive that as part of the offer process?
Yeah, it's a great question. I mean, I think in terms of getting to the closing table, like, all the stuff we just talked about, like, I feel like we've done a really good job of identifying all the roadblocks there potentially are, and are truly coming up with practical solutions to work through those things. So I think maybe it might not be, in the spring market, like when you think spring market, I think like overwhelming and fast and everything kind of speeds up. So I would say maybe in the spring market, let's not do things quite as fast, right? So like, let's be smart about it in terms of like, instead of a 3 weeks closing, because there's like a gazillion different offers, maybe do 4 weeks or 5 weeks, just to kind of give everybody, because there's no way the system's going to run as efficiently as it's changing so fast. Certainly there's going to be exceptions, and everybody can make a miracle happen. But like in terms of just, so to answer your first question in terms of are the buyers going to get to the closing table? The answer is yes. I mean, as long as their information stays the same from the beginning to the end, we're absolutely going to get them to the closing table, because we can do the applications. Fortunately, this is 2020, and I can't tell you how many times, I've talked to, all our companies. I mean, everybody's working from home. You've got 4,000 or 5,000 person companies, 10 and 20,000 companies, literally virtually overnight, going completely remote and functioning. So that's been amazing. I mean, we're fully virtual. I've got a 40-person staff, and all 40 people are working in 40 different locations, and we didn't skip a beat. And you're hearing those all across every industry, and that's exciting. So mortgages can be approved, appraisals can be done, although differently. The title work's getting done. The registries are e-recording and or getting there, and between the gap insurance, between a closing and money changing hands, even if they're not open that day, you can still conduct business, transact, and then just get it recorded after. So I'm confident that's going to happen. In terms of a seller worrying about a buyer, certainly, like I said, frankly, we've got, if something changes, which is realistic, then there's concern. I think I think it's hard to say, because like I said, 3 million people got laid off last week. So certain industries are definitely being impacted more than others, and I think that's going to continue to happen. So yeah, I mean, the one thing you can't control is if somebody has a job at the beginning of the process and the end, and you could analyze that all day long. Some of it's just unpredictable. If somebody doesn't have income or loses their income that they were approved with, unfortunately right now they're not going to get a mortgage, and nor should they, because how are they going to make those mortgage payments, right, if they don't have income? And so that's the hard part, is like, and there's only so much information as a seller or as a seller's representative that you can get about the buyers in terms of what they do for work, and like there's only so much information that they're willing to disclose or should be disclosing. So that's the only challenging part. And then obviously, if like I was saying, somebody that had $100,000 in investable accounts a month ago or 6 weeks ago has 70,000 today, because the market's gone down by 30%. So there is some volatility obviously in terms of employment. My biggest two concerns are employment and assets. And assets have decreased because of the stock market coming down. And I don't know how much more I don't know if we've stabilized there or there's some room to go down further. But those are the two concerns. But I don't know how a seller could predict those two things from happening. So I think, there's always there's always crazy stuff that happens. So I would just say, you've just got to do what you always normally did in terms of just like asking the right questions, prepare as much as you can. They know that the unexpected could happen, but everybody's doing their best to kind of prevent that from happening.
Well, you hit it on the head that there's a lot of unexpected, but I do want you to try and use your crystal ball, because I'm curious, what do you see? I think we've hit a little bit on those short-term effects, but what do you think the long-term effects and changes? There's going to be probably some good and some bad. What do you think is going to come of all this?
I mean, obviously, I don't know how you I know that it doesn't seem like we're really prepared for something like this in terms of like a global pandemic, right? So it's I think from a financial, if you look back at like the financial crisis, right? Like they put in a lot of things afterwards, and they weren't really prepared for that one either, right? So 10 years ago, obviously our housing market and the economy essentially came to a grinding halt, and it was really bad for a long extended time. And after we came out of that, they really put some things into effect in terms of the Consumer Financial Protection Bureau. Dodd-Frank was passed. Like they did a lot of things to protect consumers and create long-term stability in the housing market and in mortgages and real estate. So I think hopefully they fix issues that could prevent something like this from happening again. Although I don't know how you fight Mother Nature, right? That's a whole different thing. But I do think we're going to recover very well as an economy once this ends. Like we need some positivity and some good news to start coming out, and us to be able to kind of see the curve flatten and numbers start going down. But 6 weeks ago, the stock market was at all-time records. Income was up. Unemployment was at its lowest level ever. Mortgage default was at its lowest level ever. Wages were up. People are moving to, I'll just say, Boston and the surrounding suburbs in record numbers from all over the world because of the tech sector and the biotech sector and the economy that's been created here. So I do think that, and so the momentum was really strong. And typically, and again, this wasn't a financial crisis or an economic crisis. It's turning into one. It's a health crisis. So if we come out of it quickly, I think all those people are going to go right back to work, because those industries that are really getting devastated aren't just going to disappear. Like I always think of like the hotel and the airline and the tourism, like that stuff. People go back to work at those places. Like those employers need those employees back. So I think as long as it's not like a 2 to 3 year issue where we're like living inside and our economy is grinding to a halt, then I think we're okay. I think if it's 2 to 3 months, I think it'll be one of those things that we look back and be like, remember how crazy that was, and it seemed really bad, but we recovered and we've moved on. But if it's protracted, it's a long process. I don't know how to answer that question, because as the more and more people stay unemployed, it starts feeding into other businesses, and more and more job loss happens, and there the more and more fear that happens, things tend to kind of just grind to a halt. So I'm a big believer that the government's acted swiftly, like, even though we everybody's got their opinion in terms of like how long it's taken. If you look back at how fast they acted this time and to roll out a $2 trillion package just in a few weeks, and if you look at the depth of which they're covering so many different angles, they're throwing everything they can at it, and they don't. The Fed said that it's an unlimited supply of ideas that they're going to keep throwing at it to help us recover from it. So they seem pretty motivated to inject fuel into this so that we can come out of it the other side. And they want it to obviously happen fast, because this is much worse than seems like anybody planned for. So they're trying to do everything they can, which is, to me, really encouraging, because they're saying and doing all the right things in terms of economically and financially anyways. Obviously, how do you get everybody to really start listening and social distancing and doing all the things they need to do to kind of stop this from spreading? I think that's the biggest key right now, is stopping the spread of it, and that will allow us to get back to normal faster.
Well, I'm hearing an optimistic outlook from you, so I appreciate that, and I like that.
100%. Yeah. No, seriously, I am. I believe, I believe in our economy. I believe that our economy, our country is resilient. There's always unexpected things, whether it's like, the financial crisis, 9/11, Katrina, like all these other crazy things that you could never prepare for or plan for. And we always and you can go back further in course of time, much more serious events, and we always bounce back. it always seems really bad when you're in the middle of it, right? No matter what's going on in life. And I think, so I'm just trying to keep like a 30,000-foot view. And then obviously, we're in it too, but like, this isn't like the first time that, we've dealt with adversity. So I'm hoping that we can recover like we always have historically as a country and as a group of people.
So we're going to switch gears a little bit. We know that you and your team have been big on charitable giving over the years,
Yes.
Especially with St. Jude's. So
Yeah.
we just wanted to see kind of what you were up to right now with everything going on.
Yeah, so we have, 3 different areas in which we really, probably more, but, giving back to us is so important. We all work really, really hard, and, we strive to do great for ourselves and our families and the ones around us that we care about. But it's helping those in need that's like really fulfilling, in my opinion. So we've really made it a focus of what we do in terms of helping. So immediately right now, what we have going on is the thing we just raised $10,000 in about 2 weeks, which, we're hoping to keep going, but for Greater Boston Food Bank. So the reality is that, I have 3 little kids of my own, and, obviously I have families and friends with kids, and, so it was near and dear to my heart, because like I couldn't imagine, like, and I didn't even realize this, how many kids rely on going to school for a lot of times their only meal of the day, right? Which is like, it's kind of hard to fathom, and but it's real, right? And so when school closed, it was a big issue as to like, how are these people going to eat, right? Like, and like, this is like, it's an economic issue, but it's also real life. Like, I can't imagine one of my kids ever being hungry, right? So, we immediately jumped in. We reached out to Greater Boston Food Bank. They're getting their system stressed out, and it's not only children, it's elderly, it's homeless. They help feed people all around the state, and they need money. And it's not it's amazing how like $1 can feed up to 25 people, right? Crazy, right? And it's so we just put some awareness around that, and we asked our friends, our family, our referral partners, everybody that we know essentially. And social media is great, and a lot of people are on their computers right now looking for stuff to do. So we just spread the word, and we're asking anybody, and you don't have to donate to our team. If you want to start your own team and get behind it, Greater Boston Food Bank's just looking for as many people as they can to just help them raise money. That's the biggest thing you can do right now. Just help them with money, and it goes a very, very long way, and they help so many different people. So that's what we have going on immediately. We want to do something that help people right now. We've raised a lot of money over the course of years with St. Jude Children's Research Hospital. They're based out of Memphis, but they help people all around the world. We're one of the core groups that have helped get the St. Jude Walk off the ground, but also, we raised, there's been years we've raised over $50,000, $75,000 in terms of, just cash, go directly to the hospital to go to, so that no child, no family ever has to pay for treatment as their kids get cancer, which is probably like the most horrible thing I could imagine a kid having to go through and a family having to go through. And like I said, it's all about just like, the community, all of us, right? You guys, me, all our business comes from the people in our communities helping us out, right? Like they trust us and they help us provide for ourselves, and they give to us by trusting us to do business with us. So I think it's really important for us to give back in the form of just helping people in the communities that we work in. And that whether that's through raising money, that's okay, right? It's whether you're just investing your time back in your communities and hoping, and if raising money is the ultimate result, helps those places, and that's what they need, that's great. And the last part we do is we're very actively involved. The company I work at, Guaranteed Rate, has a foundation. It's called the Guaranteed Rate Foundation, and we help people directly. So we don't donate to organizations. We only donate directly to people. All the money raised for the foundation is through the events that we do. A lot of our employees just kick in on a monthly basis as a part of their paychecks. They just put money in. And so last year we gave away over $1 million as an organization, across the country, to families in need. So I've had the fortunate opportunity of having it directly impact my clients, my friends, my close acquaintances. And it doesn't necessarily need to even be somebody I know, but we've helped in so many different cases where just unforeseen circumstances have financial impacts. There's been instances where we paid people's mortgages and daycare costs and food and whatever it is, or shelter. It just feels amazing. I would say giving money to somebody in need, it feels 10 times better than earning anything, for yourself. So it's just important to the core of what we do, and it's something that we'll always figure out. And then we participate in what our partners and their events and their charities are important to them. They participate in ours, and it just brings the community closer together. Both, when I say community, I mean work community, family community, the actual communities that you live in. It's really active, just to not just be working and grinding the whole time. I think it just makes you realize like what's really important in life. So so that's just been a super important part of the culture of our team, and that will always be very, very important to me and the people that I work with.
Well, dude, that's awesome that you guys are doing all of that, and it is so important. I don't want to say now more than ever, but it's extremely important right now, particularly. And obviously, we try to help out however we can as well, and really admire and appreciate that you're doing that. On top of the charities and the nonprofits, we've all got to support our local businesses right now as well. So I'm curious, Shant, what is your go-to takeout near where you're living right now?
So I mean, I grew up in Watertown. I live in Belmont. And I went to school in Waltham at Bentley. So I've gone about a mile in my in my entire life. So my wife and I have actually made it a point to literally just try to pick a different place every single night to just grab takeout from, because those industries have been devastated. The restaurant business is like it's crazy. So my go-to. Wow, you're putting me on the spot here. So my go-to favorite takeout place. So there is a, wow, I'm going to get in trouble because I'm going to leave somebody out, right? I'm going to go with if I had to have one meal, real quick takeout, I'm going to, there's a place in Brighton, which is right on the Watertown line though. It's garlic and lemon. I'm Armenian. They've got amazing Middle Eastern, Lebanese, Armenian food. And so if I'm having one meal, I'm probably hitting that place up. They've got great food, but there's so many others. I mean, I have so many friends and family that own restaurants, so I'm probably upsetting somebody right now. So hopefully they don't see that one, but I love garlic and lemon over in
That's
awesome.
great. That's great. So Shant, thank you so much for coming on. We really appreciate it. Before you kind of sign off, is there one last thing you want to say to, buyers out there? Any last advice you want to give them?
Yeah, I would say, don't panic with like what's going on right now. I think it's really just gives us an opportunity to I would say, keep planning, right? Things are certainly in terms of like open houses aren't really happening right now, there's virtual ones, but I said just keep focused in terms of like, just arm yourself with a ton of information. I think the more information and more prepared you are, the less stress and anxiety is. You're not forced to buy a house, right? You can buy a house whenever the time is right for you. But don't prepare like 2 minutes before you find the perfect house, right? Like don't wait till it's the Sunday morning or the Sunday night before for open house day to get ready. It's like arm yourself with a ton of information. It will make the whole process seem much easier. It will make a complicated process much more simple. So just be prepared, I'd say is my number one tip right now.
All right. Well, Shant, thank you so much. We will obviously be in touch.
I got one more. It's really, really important that you work with, and this isn't me or you guys or whatever. It's just really important to work with professionals, right? There's a huge difference between really great attorneys and real estate agents, mortgage people, and just like in any other business, I think arming yourself with a really great team to help you navigate the home buying process is also equally as important as being prepared.
Well, I will second that on all facets of the industry. But Shant, thank you so much, man. This was great. Be safe, be sane, and hopefully we didn't wake up your daughter during this.
Oh, she's doing great. She's snoring right through it. So I think she likes the sound of my rambling voice.
Beautiful. All right, bud. Thanks so much.
Thank you very much, guys. I appreciate you having me.
Bye-bye.
Bye.